Hello and welcome back to Understanding Crypto. My name is Herve, and every other day here we cover things like predictive analysis, research and tutorials to help you navigate your way through this vast world of coins and tokens. If that's the type of content you find interesting, be sure to click that like button and subscribe to the channel so that you don't miss important videos like this one. Now, I will leave timestamps down below so that you can click to the part of the video that interests you the most. With that said and done, let's go right into the video, shall we? Today we'll be looking at MicroStrategy's Bitcoin gamble, the full story of a corporate crypto revolution, a company that's gone from building software to betting billions on Bitcoin. This isn't just a company buying crypto. It's a radical strategy that's reshaping the markets that we know and love, some of us anyway. Led by a controversial figure, of course, named Michael Saylor. So, how did MicroStrategy start? How did it become one of the world's biggest corporate Bitcoin holder? How does this whole Bitcoin strategy actually work? And what could it mean for Bitcoin's future price? And most importantly, are there dangers lurking in this high-stakes game? We will break this all down step by step, and by the end, you will have a complete picture of MicroStrategy's Bitcoin revolution. Back in early 1989, a young MIT graduate named Michael Saylor teamed up with his classmates Sanju and Thomas to start a company called MicroStrategy. Born in 1965 in Lincoln, Nebraska, Saylor grew up on Air Force bases dreaming of big ideas. At MIT, he earned degrees in aerospace engineering and history of science, showing his knack for blending tech and big picture thinking. After working as a consultant building computer models for companies like DuPont, Saylor saw a gap in the market for software that could help businesses make sense of their data. MicroStrategy focused on business intelligence, a software that crunches numbers to help companies like McDonald's or Walmart make smarter decisions. In the 1990s, this was cutting-edge stuff, and MicroStrategy grew fast, signing big clients and building a solid reputation. By 1998, the company went public, catching the dot-com fever. Its stock skyrocketed to $333 a share, briefly making Saylor a billionaire on paper. But the dot-com bubble was about to bust, and MicroStrategy was in a rough ride. In the year 2000, MicroStrategy hit a wall. The US Securities and Exchange Commission, we've heard about them before, accused Saylor and two other executives of fraud. What happened? Between 1998 and 1999, the company had overstated its revenue, hiding losses to keep its stock price high. When the truth came out, MicroStrategy's stock crashed by 62% in a single day. Saylor's personal wealth took a $6 billion hit, one of the biggest losses in history. The company settled with the SEC, paying $11 million, while Saylor personally shelled out about $350,000 in fines and $8.3 million in disgorgement. This scandal could have ended MicroStrategy, but Saylor stayed on as CEO, determined to rebuild. Over the next decade, the company stabilized, offering cloud-based analytics and mobile apps. By the 2010s, MicroStrategy was a respected but low-key player, generating about $500 million a year in revenue. It wasn't a tech giant like Google, however, but it was steady. Still, its stock price was stagnant, and Saylor was itchy for something bigger. Little did anyone know he was about to make a move that would change everything. Before we get to the Bitcoin part, let's talk about Michael Saylor himself. We have to know him. He is the biggest bull in crypto right now, so we really have to know him. He is a brilliant but polarizing figure. With over 48 patents and a track record for building companies from scratch, Saylor's a certified innovator. He's also a philanthropist, founding Saylor Academy, which offers free online courses to millions. Beyond the 2000 SEC fraud case, Saylor settled a $40 million tax fraud lawsuit in 2024 tied to allegations that he dodged taxes in Washington, D.C. These incidents paint him as a risk-taker, unafraid to push boundaries. Saylor's personality is intense. He's a self-described libertarian who distrusts fiat currencies, believing central banks printing money erodes wealth. He's obsessed with Bitcoin, calling it digital gold and predicting that it will hit $13 million by 2045. In 2022, Saylor stepped down as CEO to focus on Bitcoin strategy, becoming executive chairman while Feng Li took over as CEO. But make no mistake, Saylor's still the mastermind, controlling 9.8% of MicroStrategy's shares and 45% of its voting power as of 2025. Now, let's look at the heart of the story: MicroStrategy's transformation into a Bitcoin powerhouse. In 2020, the company was sitting on a pile of cash, but Saylor was worried. With COVID-era stimulus flooding markets, he feared inflation could eat away at MicroStrategy's savings. He considered traditional assets like real estate or stocks, but found them lacking. Then he discovered Bitcoin, a decentralized currency with a fixed supply of 21 million coins, designed to resist inflation. Saylor was hooked. In August of 2020, Strategy made history, becoming the first public company to adopt Bitcoin as its primary treasury reserve asset. It spent $250 million to buy 21,454 Bitcoin. This wasn't a small experiment, it was a full-on commitment. Saylor didn't stop there. Over the next 5 years, MicroStrategy piled into Bitcoin, using every financial trick in the book to buy more. By June of 2025, the company, now rebranded as Strategy, with a bold orange logo to match its Bitcoin vibe, held 592,345 Bitcoin, worth over $63 billion. That's nearly 3% of all Bitcoin in existence, by the way, making Strategy the largest corporate Bitcoin holder by a mile. So, how does Strategy pull this off? How does a company with $463 million in annual software revenue afford $63 billion in Bitcoin? This is where things get fascinating and a bit mind-bending. Let's break down the strategy step by step, because this is the core of what makes Strategy so unique. First, Strategy raises money in two main ways: issuing debt or selling stock. The debt comes in the form of convertible notes, loans that can later turn into shares. These notes have super low interest rates, often 0% to 1%. For example, in December of 2020, Strategy issued $650 million in convertible notes at 0.7% interest. More recently, in 2025, it raised $2 billion in convertible notes and $2.1 billion in preferred stock. Selling stock means issuing more shares, which Strategy does when its stock price is high, like during Bitcoin bull runs. Second, Strategy takes this cash and buys Bitcoin, often in massive chunks. Between June 9 and 15, 2025, it scooped up 10,100 Bitcoin for $1.05 billion. These purchases are announced through SEC filings, which create a buzz in the crypto market and often pushes Bitcoin's price higher. Strategy's Bitcoin is stored securely in cold storage, which is something I always advise everyone to do. If you are not doing it, use the link in the description to find a cold wallet that you can use. I use it, everybody should be using it. Exchanges can be a bit more problematic. Yeah, you can wake up someday and not see your crypto on your preferred exchange. So use the cold wallet, link in the description. Unlike crypto exchanges, Strategy verifies its holdings through audited financial reports, not blockchain data. Third, and here is where it gets clever. When Strategy buys Bitcoin, the price tends to rise because there's less Bitcoin on the market. We all know this one, yeah? This boosts Strategy's price, which trades at a premium, sometimes 2.3 times the value of its Bitcoin holdings. A higher stock price lets Strategy sell more shares or issue more debt at better terms, raising even more money to buy Bitcoin. This creates a reinforcing cycle, what some may call a Bitcoin flywheel. To give you a sense of scale here, Strategy's 2121 plan aims to raise about $42 billion by 2027, half through stock sales and half through debt, to keep stacking Bitcoin. Its debt is structured to avoid margin calls, meaning Strategy doesn't have to sell Bitcoin if the price crashes. This is actually one of the reasons why I made this video, because it's something that I personally worried about. So let's talk about the payoff here, because Strategy's Bitcoin bet has been a rocket ship. Since August of 2020, its stock has soared over 3,000%, crushing the S&P 500 78% gain. If you invested $1,000 in Strategy back then, you'd have over $30,000 today. Saylor himself cashed out $370 million in stock in 2024, showing he's not just talking the talk here, he's actually making the money. Strategy's Bitcoin, bought at an average of $70,666 per coin, was worth over $100,000 per coin by late 2024, delivering billions in unrealized gains. The company's market value hit $88 billion, making it a Wall Street darling. In December 2024, Strategy joined the Nasdaq 100 and is now eyeing the S&P 500. For a company with less than $500 million in software revenue, that's insane. But the impact goes beyond Strategy. Its Bitcoin buys have tightened supply, helping drive Bitcoin's price from $11,000 in 2020 to over $100,000 in 2024. Other companies like Mara Holdings and even GameStop followed Strategy's lead, adopting Bitcoin treasuries. Saylor's advocacy through interviews, conferences, and even social media has made Bitcoin a boardroom topic, boosting corporate and institutional adoption. In short, Strategy is not riding the Bitcoin wave, it's helping create it. Now, let's zoom out and look at Strategy's impact on Bitcoin's price. Holding 592,345 Bitcoin, about 2.8% of the total supply, Strategy has a lot of clout. When it buys, it sucks up coins that would otherwise be traded, reducing supply and pushing price to the upside. For example, its $1.5 billion purchase in June of 2025 moved the market, signaling confidence to investors. This creates a feedback loop. Strategy's buys lift Bitcoin's price, which lifts Strategy's stock, which funds more buys. On the flip side, Strategy's dominance raises concerns. If it ever had to sell its Bitcoin, say in the worst case scenario, it could flood the market, tanking prices. Imagine 592,345 coins hitting exchanges at once. It'd be chaos. While Strategy's structure makes forced sales unlikely, the sheer size of its holdings means it's a market mover, for better or for worse. Alright, let's get to the part everybody is thinking about. The dangers of Strategy's Bitcoin gamble. This strategy looks like a genius when Bitcoin is moving to the upside, when it's soaring, when we are in a big rally. But what happens when things go south? First, Bitcoin's price is wildly volatile. In 2022, Bitcoin dropped below $20,000. And Strategy booked a $917 million loss on its holdings. If I had told them to just give me $1 million of those dollars, they wouldn't have given me. A similar crash, or worse, or a multi-year bear market could crush its stock price. Saylor admits that shareholders could get wiped out in a 90% Bitcoin crash, which is not impossible, though he insists that the company itself will stay afloat thanks to its debt structure. Second, Strategy's debt is massive. $23.4 billion against $60 million in cash as of March of 2025. While low-interest convertible notes ease the pressure, a prolonged Bitcoin downturn could make it hard to roll over debt or raise new capital. If investors lose faith, Strategy's flywheel could grind into a halt. Third, Strategy's new shares to fund Bitcoin buys dilutes existing shareholders. Since 2020, Strategy's share count has jumped by 253%. While Bitcoin per share has grown fourfold, dilution could erode value if Bitcoin's price stalls or if the stock's premium shrinks. Fourth, there is legal trouble brewing. In May of 2025, a class action lawsuit hit Strategy, accusing Saylor, which is not new, CEO Feng Li and CFO Andrew Kang of misleading investors about the Bitcoin strategy's risks. The suit claims that strategy hit a $5.9 billion unrealized loss in Q1 of 2025 due to new accounting rules that require marking Bitcoin to market value. If the lawsuit succeeds, it could spook investors and invite tougher SEC scrutiny, potentially impacting other crypto companies. Finally, there is a doomsday scenario here. Could Strategy's failure trigger a crypto market crash, like Terra Luna's $40 billion implosion in 2022? Some worry Strategy's 2.8% of Bitcoin supply could flood the market in a bankruptcy, slashing prices. But let's be clear, Strategy is not Terra Luna. You can watch my Terra video, I will leave it somewhere around here. But all you need to know is that Terra collapsed because of a flawed algorithmic stablecoin. Strategy's Bitcoin is real, and its debt avoids forced liquidations. A strategy failure would hurt, maybe causing a 20 to 30% Bitcoin drop, but it's unlikely to kill the market. Bitcoin's decentralized nature is resilient, and Strategy's holdings, while big, aren't systemic like Terra's ecosystem. Still, the risks are real. A global crypto ban, a massive hack of Strategy's cold storage, or a sharp rise in interest rates could spell trouble. Even without a crash, Strategy's dominance raises centralization fears in a market that's supposed to be decentralized. So, where does this leave us? Strategy's Bitcoin bet is one of the boldest experiments in finance history, from a sleepy software firm to a $63 billion Bitcoin juggernaut. It's redefined what a company can be. Michael Saylor's vision, using cheap debt and stock sales to stack Bitcoin, has delivered jaw-dropping returns, boosting Bitcoin's price and inspired a wave of corporate adoption. But it's not without flaws. Volatility, debt, dilution, and legal battles loom large. And while a Terra-style collapse is unlikely, a misstep could rattle the crypto markets. For investors, Strategy is a high-risk, high-reward play. If Bitcoin keeps climbing, fueled by ETFs, corporate treasuries, or even a US strategic reserve, Strategy could be a legend. If Bitcoin tanks, however, shareholders could lose big. For the crypto world, Strategy is a double-edged sword, a champion of adoption, but a reminder that even decentralized markets can have centralized players. So, what do you think? Is Michael Saylor a genius or a gambler? Is Strategy's strategy a blueprint for the future or a bubble waiting to pop? Let me know your thoughts in the comments, and also let me know if you want more videos like this. Make sure to like, subscribe to the channel, but until the next one, stay safe.